Well, the JSE All Share Index has been trading higher around 65,408 points after two straight sessions of losses, mainly supported by a recovery in tech stocks. Meanwhile, investors have continued to monitor ongoing earnings season and expectations of slower rate hikes by major central banks. Thabiso Mamathuba is an investment analyst with FNB with us again today to talk about the latest market moves. Thabiso, welcome back. Today, some update. The rand weaker in early trade on Tuesday. Local issues such as power cuts, load shedding, as well as the deadlock in the wage discussions in government weighing on sentiment at the moment.
Yeah, so we've seen the local unit just continuing to trade weaker against major currencies this morning. And some of the local issues you've mentioned are definitely a drag on investor sentiment locally. But we're also seeing other emerging market currencies also coming under pressure as risk appetite remains uneven across global markets today. However, the JSE has clawed back some of yesterday's sharp losses, with both Naspers and Prosus just staging a recovery following the sell-off that we saw on Monday. And then financials and industrials are both trading in positive territory, while resources are in the red so far this afternoon due to lower commodity prices.
So the strangest thing is happening, Thabiso. While I was speaking to you, we're seeing little flashes with your connection. I'm not sure what's going on with the video connection. I'm hoping we can find some other pictures to help make our conversation just flow a bit better. But let's see if we can persist with one more question, because I was looking at the country's leading business cycle indicator, now down 2.3% in August. Let's just explain to everyone what that is and how that data should be read.
Sure. So this indicator basically collects data on vehicle sales, business confidence, money supply, and other factors, basically to gauge the outlook for Africa's, for South Africa. And so far, what we've seen with this latest print is that this is now the second straight month of decreases in the index, and the most in 13 months, with 9 out of the 10 available component time series recording decline, while only one component increased. So the largest negative contributing factor, or rather the largest negative contributors, were a decline in the number of residential building plans that were approved and a narrowing of the interest rate spreads. And then the positive contribution basically came from an increase in the volume of orders in manufacturing. But overall, Tembekile, the poor reading could definitely point to a subdued recovery in the economy after we saw GDP declined by 0.7% in the second quarter of this year.
Pick and Base Stores Limited has been approved for a secondary listing on the A2X market. Which markets are those, and how will that help?
Yeah, so we saw this company announcing this morning that they have been approved for a secondary listing on the A2X markets, which is an alternative exchange. And this is to provide shareholders with a choice to transact shares on an additional platform and capture some of the benefits that it offers in the form of lower cost and narrower spreads. So the company will retain its primary listing on the JSE, and its issued shares on the JSE will not be affected by the secondary listing. So this is definitely a positive development for shareholders who will also benefit from additional liquidity. And I think it also supports the growth for a solid capital market in South Africa.
Right. Finally, Thabiso, in the next 24 hours or so, we're going to hear from the Finance Minister, Enoch Godongwana, tabling the medium-term budget policy statement. Your expectations?
Sure. So I think firstly, I think tomorrow's budget is expected to outline exactly how fiscal revenue has performed against initial projections, which were outlined by the Finance Minister in the budget speech in Feb. So we know that the export earnings so far this year in particular has been very solid, and we've seen we've seen that actually being supportive of revenue. However, this is likely to be offset by Transnet challenges as well as subdued global economic activity. And then on the expenditure side, we could see some pressure coming through from higher interest rates environment, which would result in higher debt services costs. And in addition to this, it would be interesting to also see the impact on expenditure from the higher than budgeted public sector wages, as well as the bailouts of state-owned companies and extended social relief of distress grants. And we know that these obviously, pose additional pressure on government spending. And just last but not least, Tembekile, the finance minister should provide guidance on how Eskom's debt will be handled going forward.
Thabiso Mamathuba, good to speak to you. Thank you.